So you're gonna tell us by showing us.
Well, now I got to cut all this out, but yeah.
Yeah, no, wait. There's a false start. Everybody back in positions.
I know Josh will love this too. He'll love this. It's football time in Tennessee. You ready? All right. So on ESPN, they're showing a lot of football highlights because we have
football.
Exactly. We lost the football, so now we're into getting all excited and trying to distract us from losing by saying football's right around the corner. So it is almost August. So
we're only 5 weeks out, 6 weeks out.
Exactly. And oops, Tennessee is
week 0.
Now I'm going to be looking down at the stop recording button way too much.
Let's say, are we recording?
Yes. No more and I'm probably going to keep looking down through the whole video. I'll be doing this right here.
He's a bobblehead.
All right. Yes.
Jerk every now and then to be Max Headroom. You got this.
Bob. Yep. Oh, that.
That.
Yep. Yes. I watched it. All right. I'm Darin with the Arbitrage Trade. This is After the Bell. My guests are in the top right-hand corner, Daniel Hopwood, Mr. Institution. We've got Josh Morgan, bottom left corner, otherwise known as JPM. And the bankster, bottom right, is the esteemed Royce Wells, our Quanticus Maximus, and best salesman I've ever seen in my life. I am the ape here, and I'm dumb money. I throw poo at things and evidently into my brokerage accounts and don't get much back. So
I've been trying to fix that for years, sir.
He's a slow learner.
Buy some AMC. No, I'm just kidding.
We're not financial advisors. This is not financial advice. Please seek out a duly licensed financial advisor when seeking financial advice.
Thank you. Thank you. I don't even need to say that. Good job, Royce. From now on, no, I'm just kidding.
But wait, there's more.
Right. The Ginsu knife. It slices, it dices, it castrizes.
And all right. Julian's frying.
Some micro machines.
That's right. As seen on TV. All right, let's go ahead and get started here. The market, the numbers they haven't changed too much from they have from Daniel when you first looked at him, because we had a red day. We have
was it?
What's that?
No, it closed.
See, that's the trick.
What are you saying?
The trick.
It closed pretty much green.
Okay, well, besides the Dow Jones being down
to one, trading view shows
who the hell looks at the Dow? It makes up 30 companies. It's like
I give the three markets, which are the Dow Jones, which is at 52,348, down 1.09. It was the winner of the day in the down category. We've got S&P 500 at 7482. It is down 21 or 0.28%. NASDAQ is at 25,870, and it is down 0.2. Then let's move on to the rest. The dollar was at $100.75, which is actually going upward. We have the
one right now.
Yeah, there you go. See, it's even going further because of things happening, as in strikes again in the Middle East. We've got crude, WTI, and Brent both up. Crude is at 75.01. At least it was when we started. It could be more now. Brent 78.57. We have gold at 40.91, which is kind of flat from last week. And that's what I try to go from, is where were we last week to what we are now. We have silver at 58.81, which is really sucking, and it's down from last week. We've got Bitcoin at 62,729 from last week. I know it's come down, but from last week it's actually been up 3.68%. And XRP is at $1.09, which is still also up 0.3 or 3.64. And the 10-year is really moving. It's at 4.56 from last week. What do you want to add as far as the numbers go, Daniel?
All right. Well, first, when you get out of 1920, take the Dow out and start looking at the Russell 2000. Okay.
All right. Nobody looks at the Russell either until recently.
IWM.
Because you think everything's going
every single week in my Substack.
Because you think everything's going to rotate to the Russell, right? Go ahead. What?
No, it just makes up 2,000 companies and is like the other half of the small mid cap.
Only
market,
7 matter,
so
Daniel. Only 7 to 10 matter. So anyway, go ahead.
Well, it looks like we're rotating out of those 7.
That's what they've said for 2 years.
Well, go look at the chart. It looks pretty ugly this time, Darin.
I'm messing with you. Go ahead.
I mean, we're relatively flat from where we were last week. Really, price is kind of battling with the moving averages. We've gotten a bit bearish on some of the arbitrage bands. And now, we kind of have a new monkey wrench with maybe a continued war in the Middle East, but the market doesn't really seem to be reacting to that, at least yet.
Is the war still going on in Ukraine, or is that over?
Yes.
No, it's still happening.
Oh, it's escalating.
You're not supposed to be looking that way, though.
Is it?
Yeah, they're getting fresh new missiles and fresh new funding, and
oh wow, what a turn of events! And then Michael Saylor sold a bunch of Bitcoin, so now everyone continues to be bearish on Bitcoin.
What, he sold it for what he bought it for? What are you talking about? At least during one of his rounds, he bought them around this time, or I think in the 50s.
I have no idea. I've never really kept up with that story, but it definitely has added some selling pressure at points.
Is gold going up or down?
Gold's like kind of in the middle of nowhere at 4,000.
That wasn't the question. Is it going to go up or down? That's what I'm wondering.
Oh, is it going to go up or down? I mean, yeah, long term it'll probably go up. I don't know.
Yeah. Okay.
I refuse to answer that question on the grounds that it may make me rich. Well, wait. I'm with Daniel. It's going to go up next.
Oh yeah.
Yeah. I see that coming. As long as they don't find a way to manipulate it and blow out people.
You see, actually, I the best thing about all this and all the program that I do, guys, I don't have to have an opinion about the market. I just turn it on and say, that's what it says it's going to do. That's what it says it's going to do.
It's almost like you have the news before it happens. Pretty much.
We're working on that.
You just don't know specifically what it is, the detail of the news.
Oh,
but something bad or good's going to happen.
This is where it's going to get fun. It's like, I wore green socks today. That's why SPY went down.
He's a wizard.
I'll be looking at his socks every day now. Okay. It's a tip.
It worked.
That's right.
I'm wearing my green socks, guys. You know what that means.
There you go. All right, Josh, any comments on the market before we move on?
Nope.
Okay. We're bringing this jobs thing up again, this fairy tale of thing called jobs. Go ahead and tell us what the latest is with all the numbers that were surveyed. What's going on?
You know what, Darin? Next time, I think you can bring your own jobs report. You can go around the country calling people, figuring out what the jobs are. So until then, we're just going to have to go with what.
It'll look like this. My report will look just like this. Okay.
Just be blank.
There's just no way to know.
So last month, there's 57,000 added jobs, which is about half of the estimated amount. And then April and May were revised down mildly. Not, the biggest revisions we've ever talked about here, but definitely noteworthy. So we've added an average of 92,000 jobs a month this year, where the last year we lost 8,000 jobs a month. So, as of the numbers right now that Darin does not believe, the market is slowly growing, but it compared to last year. But when you look at it kind of on a whole, really the job market's kind of been in flux of not really that many firings, not that many hirings. So it's I'll say relatively stable, given everything that's going on, which is good for the Fed because it's kind of now they at least currently only have to worry about what inflation is going to do, versus also where the job market is going. Obviously, that could change tomorrow. And so I do think one of the interesting things, though, is that I was listening to another podcast and they were talking about how companies that have employed AI into their company have actually seen higher rates of hiring than companies that haven't. And so it's the kind of like everybody's getting fired narrative from AI is at least currently falling a little flat on its face.
Okay. You said narrative. I'll use that. I could go along with that. Well, I mean, all right, no, we don't need to get off into that again. I've done it a couple of weeks in a row. I'm not doing it again. But yeah, the jobs, if you look at it from a standpoint of what was it last year to now, and you do that track of the last year, it's was not good. But lately, what's being reported is showing either flat or upward tick. But I mean, well, we'll see. We'll see as the inflation grows. We'll see what employers actually do. We'll move on to the cracks in the AI trade. That is true. I mean, if you look at Micron, what happened just recently, and chips and like, where are we this week, Daniel? I mean, are we? Which part of the whole AI thing are we supposed to be? Is going green and which is going red right now? Because all they're doing is just trading out. I know Apple just announced something with Qualcomm about using their chips today, or yesterday. So maybe that's the next is phone chips. I don't know. Go ahead, tell me what's going on. You did a nice little thing, by the way, with our blogs for the last 2 days. If guys want to go back to our website and look at the last 2 days of blogs, because you talked about this to a degree and where we might be in the whole cycle. So go ahead. What you got, Daniel?
Yeah, so I mean, I think you're talking about like the microchip cycle and how like the build out of them happens. Yeah, so I mean, that's pretty interesting read. But on a separate point, I mean, it's kind of tangential to what's going on now, is that Meta announced that they were going to start selling their AI compute infrastructure, essentially making themselves a neo cloud, which kind of gave the market a lot of pause that maybe there is not as much demand for the compute infrastructure that currently sits out there for AI. And this caused a lot of pressure on the already existing neo clouds like how do you say it, Nibius, and some of the other providers, because if Meta's going to come in, they're probably going to have good infrastructure, be able to provide it cheaply, and so it kind of floods the marketplace with the offering. So there's less supply demand constraint that was previously driving the AI trade. Now the caveat to this argument is that who the heck is using the Meta AI for anything? So it's like, they probably, they specifically got like a little bit ahead of their skis. But some of the other concerning points is that Samsung report preliminary earnings and that, they're beating by a wide margin, but the stock still fell on concerns of future demand. And if you look at the revenue bookings of like Micron, for example, they're like double digit the last 2 years. It's like, it's more than that. It's like a 5x increase in their revenue. And the market is saying essentially that like, for the current price of the stock to continue to go up, they would have to 5x revenue again, which is just like highly unlikely. And so you're seeing kind of like a multiple compression, which is what we talk about in the blog. Very common for these companies is that they build out a bunch to increase supply, and then the supply gets bought up, it raises the stock up, they make a bunch of money, but then they fall back when they have to build out more infrastructure to meet demand again. It's like a very typical commodity stock cycle. And then in the US, we have SK Hynix, which is a large Korean memory producer, planning an IPO this week of their ADR and R market, which brings into question, we've recently had Tesla, and how much more supply can our market take? And if you look at all the major indices, and I guess including the Dow, they're trading down a little bit. So, it's not quite looking like the environment where people are going to take on, new risk.
Well, unless they pulled it out. And now they want to bring it back in again with this. What's NeoCloud? What is a NeoCloud?
It's just like a small new cloud provider that provides specific infrastructure. In this case, for like a lot of them were originally crypto mining clouds, like Iron and Cypher. And so, they had a bunch of GPUs from then, and they've converted into being more AI infrastructure focused.
Okay.
Like, I understand why. I mean, just to jump in on this one, I understand why, or what I don't understand is why this one was so destructive. I know it was a big news cycle story over the past week, but it's kind of the same thing that SpaceX did recently with Colossus, and Google had their Reflection, where they're basically just renting out their compute. But it's even like, what I don't understand why this particular case was so disruptive, because it's not even like Meta was renting out. I mean, to Daniel's point, I mean, who's buying Meta compute anyways? And then secondarily, Meta had also agreed to pay these neoclouds. So they're essentially, they're paying these neoclouds like $50 billion. So they're essentially the middleman in this story. They're not coming up with anything revolutionary. They're not introducing anything new to the whole cycle. It just seems like more of that, incestuous model, because they're just, again, they're doing the buying from the neoclouds to rent out to everyone, to renting out their compute of the neoclouds. So they're not bringing anything additional to the table. It's just kind of, they're the guy in the middle. And I don't understand why this caused, you got like NVIDIA, Micron, SanDisk, Intel, they all dipped, 7 to 10%, which is not anything to scoff at. But again, it didn't introduce anything revolutionary. It just seemed like there's something underneath the surface that we're missing, that this just happens to be, the explanation that everybody jumped on. Like, to me, it almost seems like maybe this is a prime example of how jittery the market currently is, or how uncertain the market is, or what, because to me, it did not make a lot of sense. It just seemed like a huge overreaction of what the news actually was.
Yeah, I think some of these brokerages were looking for an excuse, pretty much, to sell, and this gave them that excuse. I put this in my. You're laughingly, you were talking about Meta and AI. I put it in the three things today, but they are they're trying to catch up basically on AI, of course. And one of those things is the image generators, and now they're going to have that available for WhatsApp, Instagram, and Facebook, of course, to where you can go in and do the same thing that you can do basically with the Snapchats and the TikToks, etc. So they're going to use that. Plus, don't forget they have the glasses that they're really starting to push, and you'll see a lot of that. I think the Ray-Bans, etc. And they're going to have a bunch of different ones for that you can wear around.
So Daniel Hopwood.
What?
Substack. It's gonna be great. He has surfboard. He can pull it off.
Yeah.
There you go.
There you go. Let's go to one of the things that when it was announced, I was like, oh boy, this is going for votes. This is also at the same time going to pump up the markets and give them another lifeline to use and to pump money directly from the government into the stock market, which is these children's accounts. And now it's also, I guess, to encourage population growth, because it starts now. It's not something you get in the past. It starts now and goes. So if you have a baby between now and, I don't know, I feel like they said the cutoff was 28 or something, or 2028.
So they're encouraging people to have kids.
Yeah. So it's funny because it's a seeding account is the term that was used, and to have a baby. Never mind.
It sounds seedy, all right.
Well, I was thinking about people talking about their seed, but let's go.
Yeah.
Yes. Ooh, just turned to rated R. All right. So explain it, Daniel. You said it started born on the 4th of July. Yeah, it started on the 4th of July. You had a baby.
I first hold on. First, I have a question for Josh. Do you have to get a new passport this year?
Oh, maybe.
Ooh,
Well, guess who's about to get their limited edition 250th U.S. anniversary with Trump on the front of the passport?
There's got to be options. There have to be options. I may just not leave the country anymore.
I saw it on Twitter. I saw it on Twitter. I was like, this is unreal. Like,
no, because when we left for Portugal a few months ago, like we actually had to look into it to make sure that the passports were still valid. So, oh boy. Okay. Maybe there'll be an option there. Maybe I can, just keep this one and I'll just scratch out the expiration date and they'll never notice.
Or just put a sticker over his face, I guess.
I mean, well, I don't think you can do that. I think it might invalidate the passport.
I said sticker.
I think you can only put stickers on the sticker pages, and I don't think
you use Velcro, and you can rip it off when necessary.
All right. Well, I just wanted to make sure Josh was prepared for his new passport. So that's
I appreciate it.
That's funny.
So on the 4th of July, what is being dubbed the Trump savings accounts or investing accounts were now available to all U.S. children. So initially, I think it's for the next year.
New babies.
The accounts will be each child will receive $1,000 in their savings account from the U.S. government. There's a few other like Michael Dell is contributing stock. Couple other super rich, famous business people are contributing money. I don't know how that all pans out into going into this exactly and who gets what. But there's some billionaire activism behind it. And these accounts act as kind of this quasi, tax-free investing account that's not for retirement per se, because this is independent of having an IRA, but can be used when the child turns 18 for education, start a business, a home, or you can ultimately save it for retirement. So the point of these accounts was to kind of get everybody to. And the other thing is, these accounts can be invested in by $5,000 annually. So it's a lower contribution amount than an IRA, but you don't have to have income to have money put into it. So in other words, your parents can put money into it very easily. And it's all pre-tax. So the point of these accounts was to make everyone a participant in the stock market. But a lot of people are speculating that this just creates greater wealth inequality because the people that already have money are going to be the ones contributing to it. So, TBD on what exactly happens. But I'm wondering if this is just another vehicle for passive flows into the market that keep it propped up and alive, which I believe I've written a blog post about how IRAs and 401ks have done that since the 70s or 80s, whenever they came out. And that's my conspiracy theory, is that they're not for retirement, they're to prop up the market. Not these retirement accounts, because the contribution limits are way higher. But
yeah, where's the money coming from is my guess. I mean, we can't even pay Social Security, they say, up to a certain point. We're about to run out of that. So we're going to flip it to the kids coming in and being born in the next year or so. I don't know. And it seems like that's a test. So what they're going to do is probably see the test, and then this could even be the first steps towards universal wage. Who knows? I mean, I could see how it could turn into that. And we're just being tested, and it's going to be a huge success. and then they're going to expand it.
Huge.
They're going to expand it to everybody up to 18 years old. And I mean, I can see how it could really just it could snowball into that. But I just wonder where, again, the money that we're already 40 trillion in debt that we're going to get to do this. Now, I don't know how many babies are born per year, but I mean, 1,000 times.
Okay, but you're forgetting about the qualifications. Like, it's at that. I mean, yes, okay. Let's assume it's obviously coming from the seed funding, or what we call the pilot funding. That initial deposit is
initial deposit.
It is from the government, but it's only $1,000. It's only if you opt in, and I think based on the current number of participants, that's like $1 billion,
right?
Which is chump change. I mean, that's a rounding error for government spending. And more importantly, that's also a rounding error for market moves. Like $1 billion is not going to move any indices in any direction whatsoever. Like, especially since it's going to be spread across, it's going to go into some basket account. It's going to, like, whatever. I don't know how it's structured as far as what investment vehicles they put it in, but irregardless, $1 billion is not going to
do that. You did not.
It is a real word. Look it up. I will fight you on this one. So it's not going to move. I mean, admittedly, it is structured exactly in the same way that 401ks were structured, but 401ks had employee-backed contributions, and they were, you take a portion of your paycheck. So every single month, the number of people that are going to have the financial means to actually contribute to these things is marginal at best. So you're going to have these people that are going to opt into it. They're going to get their free $1,000. And then by the time the kid turns 17 or 18 or whenever it vests, it's like $3,900.
Not if you're wealthy and you do 5,000 annually, 5,000 times 18.
But you have to make contributions to it.
Well, that's what I'm saying, though. But that's what will happen. It's almost like a guarantee.
Who is going to make contributions to these accounts?
I have to see what the
return
and all that stuff
it won't
is.
grow depending on whatever it's invested in.
Right.
So just to be clear, I'm pretty sure the investments are just in like basic market ETFs. It's not like
no, for sure.
The average annual,
for example, SPY or QQQ, how much has it grown? 200-300% in the last 15 years.
Okay, so that's that's still like $3,000. You take $1,000, you leave it there, it grows 200%. That's $3,000.
No, you're right.
Times 17 in 17 years, you factor in inflation. That's like $1,500.
Or it's 100,000 if you add 5,000 each year, roughly.
But again, that's the point that I'm trying to make. Who is going to actually contribute to these accounts?
All the wealthy will.
Enough to move the needle. And I guarantee you, the wealthy already have some sort of investment account, some sort of savings account, something already set up for these kids. This $1,000 is not going to make any significant difference unless there is something changes and it is continually like government funded, or if these, all of this, the companies that are actually adopting it start regularly contributing to it, in addition to their contributions to like 401ks, 403bs, IRAs, whatever. If they start contributing, so now they're going to, instead of giving the money directly to the employees, if they start adding to, hey, we're going to pay your, we'll pay into your retirement account, but as an added bonus, we'll pay into your child's retirement account. But then, if you got 5 kids, it's another $5,000 a year, a quarter, however they're going to do their investments. You got to think contributions or employee matched contributions are as frequently as monthly. And I guarantee you, they're not going to do an extra $1,000 a month for this whomever has 5 kids. I'm just saying, it seems
Why
like a great.
It's a write-off for them. Absolutely,
it's free. It's free.
It's a write-off for the company. That's the only reason they match. Why wouldn't they do that?
Yeah. It's going to be in addition to. They're going to do this too because it's free.
It's not going to be in addition to. It's going to be in lieu of an employee's salary. Like, hey, we'll give you 90% of what we typically would pay this person. So instead of your base salary being $100,000 a year, you're going to get $90,000 a year, and that extra $10,000 is just going to be going to your kids' new 401k or whatever you want to call it, and it's not going to be. I mean, I don't see how this really works out. Maybe I'm missing something. Maybe I'm not seeing it in the grand scheme of things. But the way it's currently structured, it requires a whole bunch of adoption for this to actually take off. And to answer the question that was posed, like, does this actually continue to prop up the market? It would take so much adoption that I just don't see that happening.
Yeah, but this could be just the beginning. That's what I wonder. Why is it a 1-year thing then? I mean, why would you cut it off after a year? That doesn't make any sense. And we know the way government programs are, they don't stop. They say, hey, we'll do this for a year, but it's meant to be for infinity, and they'll never bring it back and down to earth. I don't know.
What?
Yeah, exactly. They're trying to phase that out, evidently.
And then what they're called, to me, it just seems like a lovely PR event.
It is that too. Absolutely. Sure it is. Absolutely. And I think
children.
I think this was both I think this was passed, wasn't it passed by both Republicans and Democrats? I mean, because they couldn't put their name on it saying no. It's a $3,000 for every baby born to get them jump started towards a college career, et cetera, a house down the road, et cetera. So I personally think it's a new social program that's going to stay. But I could be wrong. We'll see. Yeah, because you said education, starting a business, home, retirement, all that stuff. Yeah, I just don't see them ever taking that away. And especially, I mean, why a year? I don't understand that. I understand not pushing it into the next administration, but that doesn't stop anybody usually.
Just to clarify, I was not saying that it was going to go away. I was answering the question.
I know. You were saying it's not going to be a boom to the market.
It's going to do anything.
And I just think it doesn't matter what the income is, whether you're wealthy. Some people got wealthy that way is they take everything that's free. And I think they'll add this on top of what they're already doing. This is small fry compared to what they're doing in their accounts. They're talking, 6 figures, and this is just 4. But I think they're going to add it on. Why not? I mean, why not add another 1,000 that's free? If someone came to me and said, here's $1,000, I'm going to take it. And
aren't our IRAs $6,500 a year anyway? Right. So, I mean, if you have the ability to have 5,000, maybe they'll start actually using IRAs.
Yeah, I don't know the details
that already
yet.
Exists, right?
The thing with the IRA though is that you have to have income to contribute to it. So this is like an account that can be attributed to without income.
And this is a way for the lower class to be able to get into investing.
So I mean, if you're on welfare, you could actually contribute money.
And with this, you can take it out without penalty.
Yeah.
Once you're 18, I believe, where IRA you take out before 65 or whatever, you pay a penalty.
That's why you take a loan against it. Financial literacy.
There you go. Yep.
I thought IRA you can't, 401k you can.
No, I think that's
can you loan against IRA?
Because once you leave a company, you can loan.
I know you can take it out against a 401k because I've done it.
Yeah. So you're saying you can't take it from an IRA at all? That doesn't. I thought basically what you put in, you could take out.
Yeah, but I'm saying like the growth amount, like you can take a loan out on the full amount of a 401k, and you pay it's pretty interesting loophole. You pay yourself back the interest. But IRA, I don't know. Like you can take the money out, but you pay a fine above the contribution amount. But I don't think you can take a loan out on the full amount like you can a 401k. But I could be wrong.
Gotcha. Yeah, I didn't know about the full amount part.
Yeah. You can pull out your full contribution amount of your IRA tax free. But it's on the gains where if you pull it out early, then you if it's not for a first house or like medical emergency or something. There's some like caveats where you don't have to pay the fee, but
All right, but if you pull it out early, then there won't be a seed. We'll move on with wrapping it up.
I knew you were about to.
All right. Guys, I am running out of time quickly. I need to
Okay.
jump on another.
No, it's 5:02. We're done though with the actual topics, and if you just want to go to your crayons, or
do we have crayons?
or Daniel, you have to pick a stock for the next week because
we haven't picked any stocks. What is up with this?
Daniel has one. Again, he's probably got this the rest of the season, and how many weeks we got left? Because I'm ready for that to happen and just move on to the next season. Because especially for
Can't
this
be that
stock,
bad.
this stock especially, it's way down into
Just a hater.
Daniel's channel, which is infinity to zero. What are you doing this week, Mister? I don't know. Do you do the ARC fund still? What's going on? What's the millennial stock this week?
We're gonna go with Duolingo. DUOL.
D what?
DUOL.
I am on day 602 of Duolingo.
All right, so Duolingo's hurting a little bit. It looks like it's a little bit exhausted, but it is pinched a little.
This is one of those bottoming patterns I like all the time. Oh, look at that gap it hasn't filled over on the left.
There
From
is
what?
that.
Okay, so I can actually support you on
November
this
of
one.
last year.
So yeah, it's ooh, that's not looking good, guys. That's not looking good, but that's okay. That's okay. So looking at this guy, actually, do you guys want to look at it old school or do you want to look at it new school?
Isn't new school cheating?
New
I was
school
gonna
is
say,
cheating.
school is.
All right, let's go back to. Let's go back.
Like,
to-
show me afterwards so I know where to put my money.
cheat codes.
Haters. All right, let me.
I'll lose the game if I can make money afterwards.
Right? It's like rigged. It might be rigged. All right, the dashboard's coming up.
I'll tell you what, I'm reading I told Darin to read the book Flash Boys, which is about kind of like the introduction of high frequency trading in the markets.
Yeah.
And it's definitely a little rigged.
Right.
That being said, they talk about how like it's essentially been rigged throughout history. But it's a very, very interesting book. I highly recommend.
I love it. All right. So
In the short term, it is rigged, yeah.
In the short term. All right. Let's see.
Oh yeah, that was sarcasm.
All right.
Stay sarcastic.
Wow. This guy has insane
Yeah.
volatility. I'm on the daily time frame, but my trend top and trend bottom are huge. All right.
Which she said.
Yeah. No more seed talk. $30 range here.
Yeah, the range is looks like I want to say safely about 110-ish, 111-ish, all the way up to 140-ish. So yeah, about $30 range. So what do you guys want to go?
What how long do we have in the season?
I don't know. I can't keep the scoreboard up. So I mean, that there's another pun there, but I'm not going to go there.
Oh, we missed 1 week.
We got
You
problems.
left us.
Yikes! I think there are like 12 or so weeks left.
Yeah.
Oh, okay. Yeah, I'm gonna have to go with some out of the money calls on this one.
There you go.
All right,
Give me
Daniel.
whatever the top range is.
What are we looking at then? 750 a piece? No, that's we're going 30. So, yeah,
Yeah, 750 a piece.
750 a piece. Yeah.
And are you going to actually start at the bottom at 110 and go up, or
It's 110 and below, right? Then 110 to.
he always goes the wrong direction? That's okay.
I'm going below. I'm going below to top.
You could make it easy. Just do
Or go
$10.
from there up. But that's good. Let's go.
That's what I'm doing. I'm going upward.
Okay, so 110 and below, and then split it 15.
I split it 750.
Yeah.
So 117.50.
Then you could go 140 and up.
Right.
So are we doing $15 ranges with the?
No, I mean, there's always the top range, like the 140 and up. Like that's how we've been doing it all season because we're doing an entire season. So,
But that means what's in the middle is 30, and that's 15 and 15, and the range is almost supposed to be 750 a piece.
I understand what you're saying. We're saying something different.
Okay.
So it would be like
That was
110.
the most, like, I have a wife
110 to 125
communication
then
ever.
is what you're saying. 110 to 125 and then 125 to no.
Yeah.
Yeah, 125 to 140, and then 140 and up.
Yeah.
But that's once again giving people a $15 range.
It is if we're doing a and up, because otherwise the two people in the middle have this big of a range, and so they're never going to win outside of the next like 2 weeks.
But that's also a mean reversion of the odd that that's basically statistically
Right.
the people in the middle. If you expand that range, they never lose. You're covering the entire range with two people. You do realize that. The entire bell curve.
It's an equal handicap because then if you get
No,
140,
it's
it
definitely
just
not an
continues to
equal
go.
handicap. Sorry, sir. Your that logic is flawed.
All right. So what I have then is 110 and below, 110, 117.50, 117.50 to 125.
117.50.
Right. 117.50 to 125.
125.
125 to
132.50. 132.50. And then
132 plus.
132.50 up.
Yeah.
Yep.
Okay.
There you go.
All right.
Crazy people.
Well,
All right,
yeah,
Royce, you
because
go
the lower
next.
it's 110 range if you're looking at it then, Josh.
So now who's picking what?
Daniel's first. He picks who and what when.
I want the top range. Royce is next.
Okay. All right. If he's taking the top range, hold on. I'm gonna have to look at my other screen.
Ah,
Oh, he's cheating.
I
At
am.
least I'm on this team.
is it cheating? If you're using your own tools, is that cheating? I don't think that's cheating.
Right?
That's fair enough. He did make it.
Right. I'm like, all right, and let me look over here. Don't pay no attention to the guy over here looking.
Notice
at
he's not putting this up on the screen. Whatever he's doing is classified and looking at his. He's probably
Okay.
looking stochastics or sarcastics.
Interesting. All right.
Okay.
I'm actually going to take the lower range. You guys are stuck in the middle. Josh, you did this to yourself.
I did not. I tried to make it fair.
Yeah. See, after you saying all that, Josh, he's really getting you bad because he's now you have to take one of the
That's
squeezed
what I'm
in.
saying. Now we're sandwiched in this little bitty tiny ranges out here, and they've got like all of these ranges.
It's beautiful. Quant win.
Oh my!
You know what, Josh? Life isn't fair, huh?
Josh, I have a karaoke song for you. Stuck in the middle with you.
All right.
Stuck in the middle.
All right, guys, I'm jumping.
All right.
Catch you later. Bye-bye.
All right.
Okay. Yeah.
All right,
All right,
Josh.
who wants to go next?
Wait, that's Daniel. It doesn't matter. We're both losers. So at this point, so what? Daniel, who's next? It doesn't matter really.
Josh can go.
All right.
Oh, it doesn't matter.
All right, Darin can go.
Okay. At least I have an opinion on this one. It's going to go up as well. So I'm going to be 125 to 132.50. And we'll just deal with it. How many weeks? Did he say 12? Can't be 12.
Something like that. Yeah.
6 weeks? I don't think it's less than that. All right.
I don't know how
So-
I don't know how I keep having to explain this to him.
I get what you're saying. It's like that.
I fully understand what Josh is saying. Yeah, I get
Yep.
it.
I swear we have a conversation every week.
All right, guys, let's get out of here. Like you said, football season's almost ready to happen in the U.S. because football, we did decent. We got to as far as we've ever gotten before, but no further. So Anyway,
That's a good baseball squeeze in the middle of
that's
it.
true too. That's true too. St. Louis Cardinals, Reds are my teams, and get frustrated every year. All right.
Braves
Daniel
leading the division.
just says sports ball. What? What'd you say, Josh?
I said Braves are leading the division.
Oh, you're a Braves guy. That's right. You and Andy here are Braves guys. All right.
Well, if you grew up in Memphis, you didn't really have a choice. That's the only game you could get on TV.
Well, but we were the Chicks, and then we were the Redbirds, which are actually farm club of the Cardinals, which is what got me liking the Cardinals.
Turner Broadcasting was the only baseball station you could watch.
In fact, as a kid, I actually was an Expos fan for a little bit because that was our farm club for a bit, Montreal Expos. I even had a hat. I know, right? I wish I still had it.
And I used to go watch the Chicks. Yep.
You watch the Chicks, that cheerleaders. Forget what they were called. Chicklets? I don't know what they were called.
I don't know. I was too young to care.
All right. Anyway, we proved in the USA we play baseball and football and basketball, but soccer, we're still working on it. But I do believe that there will be a big surge in participation in soccer, and will actually become bigger in the U.S. For the next World Cup. I do. I think there will be.
You know how long we've had the World Cup and stuff? Like, you have a better chance of winning next week.
All right, guys, let's get out of here. Move on. This is kind of early for us, 5:15. So we will see you guys.
We don't even start till right now.
Right. Hopefully that call that's going on right now is a good one. So we will see what happens, and I'll meet back here, everything willing, and World War III not starting. We'll be back next Wednesday on After the Bell. Say bye. You didn't say it, but you showed it. All right. Bye.